Morning. It is election day in the US. A little bit different because I think they have to wait for the results because of all the mail-in votes. They have to tally that. So there's not going to be an immediate result today, unlike in previous years. So it's a bit different this time around. So I'm getting a lot of questions around what should I do with my portfolio? Are there strategies around the US election? So I say, you know what? Doesn't matter. This is all noise. Again, in the grand scheme of things, okay, this is one page in a 5,000 page book. Okay. So again, slow and steady wins the race. This is all noise. Stick to your strategy. Keep investing. It doesn't matter what the outcome is. Unless you are waiting for certain valuations to hit, so because you're buying individual stocks, just ignore all of this. There's always going to be volatility around election time because there's uncertainty around who's going to win. And when there's uncertainty, markets get punished, just like back in March when the pandemic first hit North America and the North American economy kind of shut down and there was so much uncertainty around that. So what happened? Markets tanked. Markets got punished for it because they don't know what was going to happen. Okay. So same thing around now. There's uncertainty uncertainty with who's going to win the election. Okay. It doesn't matter if the Democrats win or the Republicans win. Historically speaking, it just really doesn't matter because companies continue to run, profits continue to be earned, and investors continue to make money. When I refer to politics and money, okay, obviously those are very related because we know that there are lobbyists that influence, government policy, which affect corporations, companies, profitability at the end of the day. Okay, so those are related. When I refer to election in the stock markets, that means that there's not a single thing that like Donald Trump or Joe Biden can say or tweet or argue about, and it's going to have an impact on the overall stock markets and your portfolio, okay, in the long run. Okay, if you look at the stock market, the history of the stock markets, there's not a single thing, like a single person has said in time that has brought us to where we are right now. That's not how it works because the stock markets is a reflection of future profitability of all of the companies. Okay, the stock market is a leading indicator. It is a reflection of what's going to happen, what they're expecting in the future. So when people ask me, well, how come the markets are doing so well? The economies are so shitty right now. Like there's so many people unemployed. We're still in a pandemic. What's going on? Well, that's because the stock markets, okay, people are anticipating, optimism. Okay, they're very optimistic about the future. Okay, we're at a point right now where we're like, okay, there's a vaccine on the way. There's like people are still going about their day. Certain companies are like hitting record profitability, and so the future looks rosy. Okay, remember back in March when all of this stuff hit, there was so much uncertainty. Okay, North American markets economy pretty much shut down, and there was so much uncertainty. So markets got punished for it. Okay, there was at that point in March, the future just looked bleak. Okay, but right now, fast forward to November, people are more optimistic. Okay, so that's why the stock markets are the way they are right now. Okay, past numbers like GDP, unemployment numbers, those are in the past. Okay, it's already happened. We don't care about the past. Investors, stock markets, we care about the future.